Welcome to our latest M&A Market Outlook. I'm James Hilburn.
And I'm Daniel Grosvenor. Today we'll dive into sustainability and climate-related trends we're observing in the M&A market.
Against a familiar backdrop of conflict, inflation signals, and geopolitical tension, the noise suggests that companies and investors are deprioritizing sustainability objectives. But what does the data say?
As highlighted in our recent macro M&A outlook with our colleague Dillon, deal volumes and values are down versus this point last year. This is a pattern we see across all sectors.
We've dug into the data, and if we strip out the macro pressures weighing on activity across all sectors, we observe that deals for businesses in the energy, resources, and industrial sector have risen as a proportion of total deal value. This is from 27% in 2022 to 31% in 23 year to date. It is the only sector to have posted a double-digit increase in its share of total transaction values since 2020, from 20% up to 31%, and a reverse of a trend seen in some other sectors.
Energy and industrials businesses have also been significant investors over the period, supported by robust balance sheets that have been bolstered by surging commodity prices. From this position of strength, data suggests that ER&I businesses are using M&A to acquire nascent, forward-looking technology to future-proof their businesses, either by adding new capabilities or using M&A to access new product segments. For example, over the last 3 years, ER&I investments in the tech sector have accounted for over 7% of total ER&I transaction volumes, but less than 3% on a value basis. This is clear evidence that the investments being made are smaller in value than those in other sectors.
Another trend we observe is that organizations are beginning to use M&A to transform their business models in preparation of key sustainability megatrends such as the energy transition. For example, in 2023 we've observed how several acquisitions and investments have been used to accelerate strategic sustainability objectives. These include VW and BMW, two European auto businesses, who secured their battery supply chain with investments into Europe's largest battery cell producer. Let's also look at Atkins-Realis, a Canadian company that provides engineering, procurement, and construction services. It has acquired digital process simulation technology to meet its net zero ambition.
In summary, M&A activity is becoming increasingly shaped by sustainability and climate-related trends. We anticipate that this will continue to influence deal-making throughout Q4 and into 2024.
Look out for our upcoming articles on stranded assets and the energy transition in the context of the M&A landscape.